$50 billion. That's how much money is now betting against Nvidia, the undisputed king of artificial intelligence. While traders pile up the largest short position in stock market history, Samsung just quietly announced it will convert every single factory on Earth to autonomous AI operation by 2030. One side is selling, the other is building. And the thing connecting them? A U.S. airstrike on Iran that just wiped $100 billion off the tech sector in a single day. After this video, you'll see why both sides think they're right, and why one of them is making a catastrophic mistake. Think of the AI market right now like a house during an earthquake. The people inside, the companies actually using AI, are reinforcing the walls, upgrading the foundation, building it stronger. But the people outside, the investors watching from across the street, see the walls shaking and assume the whole thing is about to collapse. They are running. In February 2026, the Nasdaq posted its worst month since March. The S&P 500 dropped over 500 points in a single session after a hotter-than-expected inflation report. And then the Iran strike hit, vaporizing over $100 trillion in tech market value overnight. From the outside, it looks like AI is crumbling. But here's where the story takes a turn nobody expected. The obvious take is simple. AI was overhyped, reality is catching up, and smart money is getting out while it can. $50 billion in Nvidia shorts, that's the market saying the AI bubble is popping. The Iran strike just accelerated what was already coming. Sounds reasonable, right? Here's the problem, that take confuses the stock price with the technology. Wall Street isn't betting against artificial intelligence. They're betting against a ticker symbol. So what's really going on? Here's what nobody is connecting. Samsung's announcement wasn't a press release for investors, it was a survival plan. When the world's largest semiconductor manufacturer says it will make every factory AI autonomous by 2030, that's not optimism. That's fear. Fear of exactly what just happened with Iran. The Strait of Hormuz, through which 20% of the world's oil passes, is now a live military flashpoint. If it closes, energy prices don't just rise. Supply chains collapse. Human workers can't get to factories. Shipping routes break. But autonomous AI factories? They don't need commuters. They don't panic when oil hits $150 a barrel. They don't call in sick during a geopolitical crisis. Samsung isn't betting on AI because the market is up. They're betting on AI because the world is falling apart. The same Iran strike that's making investors sell AI stocks is making corporations buy AI infrastructure faster. Drop a comment if you caught that paradox. But that's only half the story. While Wall Street runs from AI and Samsung runs toward it, something far stranger is happening in a lab in South Korea. KAIST, one of Asia's top research universities, just unveiled an AI model that mimics how the human brain handles mistakes. Most AI systems, when they predict wrong, just move on to the next input. This new model does something different. It pauses. It reconsiders. It asks itself why the prediction failed before making a new one, exactly like your brain does when you touch a hot stove and immediately learn not to do it again. Why does this matter right now? Because it solves the exact problem that's making investors nervous. The number one fear behind those Nvidia shorts isn't that AI is useless. It's that current AI is too expensive and too unreliable for real-world deployment. It hallucinates. It makes confident mistakes. It costs a fortune in computing power. KAIST approach, AI that self-corrects before producing output, could slash error rates and computing costs simultaneously. The irony is staggering. The very week that $50 billion bets AI has peaked, a Korean lab demonstrates the breakthrough that could make AI actually work. Wall Street is pricing in AI's past. Samsung and KAIST are building AI's future. And they're not even looking at the stock market while they do it. So what does this mean for you? If you work in manufacturing, logistics, or any job that involves a factory floor, Samsung's 2030 deadline is 4 years away. That's not a prediction. That's a corporate commitment backed by billions in capital expenditure. If you invest in tech, understand that the $50 billion short against Nvidia isn't a bet against AI. It's a bet against AI's current price tag. Those are fundamentally different things. And if geopolitical instability keeps escalating, and with the Iran situation, it almost certainly will, the companies automating fastest won't just survive. They'll dominate. The question isn't whether AI will transform the economy. It's whether you'll be ready when it does. Here's what to watch. Samsung's factory conversion timeline will become the benchmark every major manufacturer is measured against. If KAIST's self-correcting AI model gets commercialized, and early reports suggest multiple companies are already in talks, it could trigger the biggest short squeeze in Nvidia's history. The same people betting $50 billion against AI might end up funding its next rally. So here's the question that should keep you up tonight. What if the biggest risk isn't that AI fails, but that it succeeds faster than anyone is ready for?